Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very well.
Good. Well, I'm speaking to you from sunny London. I'm at a uranium conference, but we've squeezed this in because it's just too good not to. Too good not to. How are you, sir? You good?
Yeah, no, very well. Good start to September.
Mhm.
And looking forward to the next couple months. So we've got lots of different things happening and some things coming together pretty nicely. So no, it's going to be
Fan-
an interesting couple months here. So
Fantastic. Well, we're going to talk about some of those things that you're up to in a second, as well as sort of the geopolitics of nickel. But let's start with nickel price and so forth. What's been happening?
yeah, so since we last talked 2 weeks ago, we were flirting with the $17,000 a ton level, but we've now sort of bounced back into the range we've been in the last couple months in the 16,000, 16,500 range. Yeah, again, through the summer, spring and summer, we've seen exchange inventories kind of tick up a few thousand tons a week, again, which was expecting. The market was in surplus, not as large as some analysts thought, but, when you have surplus, it does tend to find its way to the market. And that's continuing. And again, still expect to see another 20, 30,000 tons before we get to the point where, I think the market's back in balance. The big thing sentiment wise is just, the R word. Recession is getting tossed around right now, and yesterday was a pretty bleak day in the equity markets for a lot of the commodities. Again, people wondering whether now, whether they're worried about inflation, now they're worried about a recession, and whether the central banks are going to cut interest rates fast enough. I think the key thing here is how the different commodities perform. I think nickel, we may retest the 15,500 level that we had back in February, one more time before we start to move higher towards 20,000. Again, I think we'll see nickel prices pretty well supported here because we are still deep into the cost curve. And so, yeah, it'll be interesting to see how the rest of the year plays out with that overhang.
Right. Well, like I say, I think the equity is more, broadly. I'm talking about, tech sector, etc. Not just mining,
Yeah.
being absolutely beaten up at the moment. I think there's hope that the U.S. elections later in the year might resolve matters, or certainly give certainty. I think is what people are looking forward to. Let's talk about the usual China Indonesia situation in the market. So again, what's coming out of Asia at the moment?
Yeah. So the key thing here is we've seen again ore prices continue to tick up. I think last week's show we had some of those charts in the note, sort of highlighting the kind of change in ore prices that we've seen. And so again, Indonesian ore prices have ticked up another dollar a ton each week for the past 2 weeks. And those translate directly into additional costs for nickel pig iron producers. So the key thing here is, Indonesia, ore supply is constrained. There are limits. I think the most important thing in those two charts that we showed last week were not only ore prices going up and ore production in Indonesia having come off somewhat. It's the fact that you saw NPI grades fall off. So that means the quality of the ore is continuing to drop off, even though ore supply has been constrained. So that part's been good. Right now through August, August is always a fairly slow month. And so not surprisingly, didn't see any strong demand trends. But, September, October is typically some of the stronger months for the Chinese battery supply chain. And we are seeing a little bit of restocking in that space. The sell-off in lithium through the summertime, has not helped, people to jump in to start restocking until they see a bottom in lithium. But I think, again, that bottom is starting to emerge. We're in a seasonal period of strength. And so, we have seen sulphate prices tick up a little bit, and have seen even stainless prices, despite sort of the malaise on the demand side, see prices tick up there. So, both of those are good. I think the key thing to watch through the fall will be, Philippine ore imports into Indonesia. Those have rocketed up through the year to see whether that continues. And then as we head into the Philippine rainy season, where one of the main producing areas can't mine or ship any ore, you will see how that translates into market supply, through November, December, January, February, at the end of this year. And again, I think that'll be one of the key supports for the market, and why I still think, we'll get back up to that $20,000 ton level by year end.
Well, and what do you think the markets are doing for explore coast and even developers currently. I was talking about this with the uranium chap CEO. He's saying that this whole supply demand fundamental that we're looking at there for uranium, and I guess you'd argue for nickel too, is there's a disconnect somewhere, because we can't keep pummeling public companies like we are and expect them to be around when we need them, when supply does become a little bit shorter. And we've been talking about some of the supply numbers currently into the future. What's your kind of reading of what's going to need to happen in terms of the way that companies raise money, access money, and even affordable money? I think, and we'll talk about it at the end of this conversation. I think about government's involvement, but conventional funding, is it there when you need it?
Well, no, I mean it's still a pretty tough market. I mean, if you look at the capital that we've raised, we've done placements with strategics in terms of Anglo American, Samsung SDI, and Agnico Eagle. I don't see that changing in the immediate future, but I think what will happen and is happening, and I can from firsthand experience is that as you said, the supply demand fundamentals, medium to longer term, for in so many commodities, there just is no pipeline or very limited pipeline of new projects. Valuation gaps have opened up massively, versus where they may have traded, just explorer developers relative to where they were historically. But then, that entire asset class versus, other asset classes, also valuation wise, which starts to attract private equity, right? So, starting to see, some more active, people in the private equity space. And so I think if you start to see some private equity transactions happen, if you start to see, some more mining company transactions to start to pick up projects, then that'll start to pull investors back into the space. I think it'll pull, generalist funds into the space, again, who were sniffing around. I think we talked 4 or 5 months ago, though, in the spring investor conferences, started to see generalists show up for the first time in 5 or 6 years. So, we're not quite there yet. They haven't showed up in enough numbers to make a difference. But I think that will be coming. And again, and hopefully governments start to do more about shorting and naked shorting. But, I think those are the things that are going to have to happen before, quote, money is available.
Well, yeah, I think the naked shorting is a kind of big problem, certainly in Canada for sure. And I think what I might do is we'll come back to the company news at the end, and we'll kind of bring forward that conversation about, I guess, news from the U.S. government in terms of its support for critical minerals, which is in dire need across the metals spectrum. What can you tell us?
Yeah, so I think that's the last 2 weeks, for investors, who've been in the space should be, highly, highly, highly encouraging. So, first off, antimony, a metal a lot of people don't spend a lot of time talking about, but it's one of those ones where China dominates supply. And so, like we've seen with some of the other commodities, they announced this week, we're going to start to put export curbs, on antimony in all forms, and also put curbs on our know-how in terms of processing that technology, basically being able to process and refine antimony. And so the point I try to make with people, critical minerals is not just an EV or energy transition story. These are national security issues for many, many global governments who are terrified that China has a stranglehold on a bunch of materials that are needed to make a modern economy function. And so, the fact that, one more metal has basically, China said, okay, we're going to start to decide how much you get, is again, will push governments into, considering even more measures. And then the second announcement, it wasn't sort of an announcement, but some reporting from some people within the current U.S. administration who said, the government is looking at basically, price support, in an effort to try and get more mines built in North America or within friendly ally countries, look at basically buying raw materials for a fixed price for a period of time to help get those projects into production. There's been also, they're also looking at stockpiling different materials. Again, I can tell you that those kinds of discussions are occurring. Those kind of ideas are being tossed around, and so that's the extent to what people, the governments are looking at. So again, across a basket of commodities, if you can find a company that's got a project that's rapidly advancing, that can sort of take advantage of this government window where lots of free government money is available, again, this price support, if it does come through, is just going to be another massive benefit. And again, U.S. government putting up tariff walls around a bunch of commodities, means that those companies that are able to move quickly, take advantage of the situation, all of this, effectively free capital that's available, and then create assets that can last for 10, 20, 30, 40 years should be a great trade. And so, honestly, both announcements over the last 2 weeks were I think pretty exciting.
Yeah, pretty exciting, and also, in fact, I was talking to someone else, Merlin, about copper specifically, and he was talking about what we need is another $180 billion into exploration to be able to make the discoveries and get projects into production to be able to produce the copper that we need. And I said, yes, not a lot of money. And he's like, well, actually, I was about to say it's a lot of money. And I said, it depends where you come from. If a U.S. government decides that critical minerals are actually critical, that's not a lot of money.
Yes,
that's not a lot of money. But there's a reluctance to go into a space which has demonstrated time and time again that it is incapable of managing money properly. Maybe I can see the reluctance, but maybe we're reaching that critical point now where maybe governments do step in and take a bit of control of that. We shall see.
I think we are getting to that tipping point, and I think the frustration because again, there has been a bunch of programs announced. They are wanting to deploy capital, but yet we haven't really seen many new mining projects, come to the fore. So, I think that's a key piece, and I think the governments have to realize too, the big mining companies, aren't being sort of local champions. They're still pretty focused on their big four materials, which are iron ore, met coal, thermal coal, and copper qualifies as the fourth material in there. But, they're not rushing out there to generate lots of new supply. They're quite happy having prices, closer to $9,000 or $10,000 a ton for copper. And so, again, I think the governments need to, help encourage, help grow new companies that can bring new projects to bear. And I think that fundamental realization is also sinking in with governments. And as I said, they will keep throwing more things at this problem until they start getting mines and processing plants get built.
Yeah. The full chain is required, and maybe we need to be slightly less terrified about the cost of that now, and focus on the cost of it in the future. And I'll kind of that will put things in perspective. Let's come to company news. Let's start with Canada Nickel first of all.
Yeah. So this morning we had announced 6 weeks ago the initial resource at Deloro, which is one of 7 additional resources we expect to be putting out through the first half of next year. From our regional exploration program, we'll be giving a more thorough update on that early next week. But again, the results have been excellent. We're very excited about the kind of results we're getting, and again, good confirmation that our geophysical targeting is going quite well. The other piece of news sort of tied into the government front was FPX has been put on a list that the British government of British Columbia basically is providing a concierge service where if you are deemed to be a critical project, then you get to go through the front of the queue, and the government's going to go and do their best to make sure everything you have to do is as streamlined as possible. Again, I think you'll see more jurisdictions take this kind of approach. One of the issues when you announce a broad program is that they may get hundreds of applications, right, for money, and as 90% of a lot of stuff in the mining space isn't really going to turn into an actual mining operation. And so if they can focus the limited resources and dollars they have on some winners, again, they're not going to get it right all the time, so always a little dangerous when governments try and pick winners. But I think again, given the need to build these critical mineral supply chains as quickly as possible, governments are going to have to do that if they want to see the results in the time frame they want to see them.
Well, look, Mark, maybe we could catch up next week on that with regards to Deloro and other things. So I wouldn't mind just trying to understand the kind of Canadian government, the kind of these kind of alternative financings that are available that companies will be looking at, and as you say, with regards to government starting to treat critical minerals as critical. So if you've got time next week, maybe we could start that conversation for sure. And I think we're there, aren't we? That's the news in the world of nickel at the moment.
Quite a couple weeks, yeah.
Brilliant. Okay, well, look, have a good one. We'll see you soon.
Sounds good.